What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to talk about why today is probably going to be a big day for the crypto market. This is the kind of content that you enjoy, so be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I want to start off, guys, with a quick recap. If you've been keeping up with my videos, you'll already know what I'm going to say. What you're looking at here is the chart of the US dollar, aka the DXY, the US dollar index. And you can see that historically speaking, when the US dollar index starts falling, this translates to a crypto rally that's led by Bitcoin. Then we have a couple of months of chop in the DXY and the US dollar index. And then we have a second leg lower that corresponds to an altcoin season. This has happened in every single crypto cycle. And looking to the current crypto cycle, we can see that the DXY basically over the last few months has basically just been chopping in a range. It's been deciding, is it going to break out or break down? The thing that's kind of quote unquote different in this cycle compared to the previous ones is that in previous cycles, this period of chop was only around 2 to 3 months in the DXY before that second leg lower. And here we've been chopping on the DXY, I don't know, for like 4 months, maybe even 5 months. So this is the one thing that's been quote unquote different. And basically now we're waiting to see, is the DXY going to break higher, in which case the crypto bull market is over? Is it going to break lower, in which case we get an altcoin season? Or is it just going to continue chopping sideways, in which case we would see more of the price action that we saw over the summer, which would basically be Bitcoin slowly grinding up into the right, with altcoins basically chopping sideways or grinding down, and select rallies here and there. And of course, the reason why the DXY is so important is basically because when the US dollar goes up, global liquidity goes down, and when the US dollar goes down, global liquidity goes up. So with that in mind, guys, you guys might have noticed that yesterday there was actually a huge drop in the US dollar and the DXY. The reason for this was basically because there was progress towards peace in Ukraine. Ukraine reportedly agreed to the US peace deal. Of course, now we're waiting for the Russian side, but you guys might remember from my video on Saturday, I was explaining the US dollar in detail, or the DXY rather, in detail. And basically the DXY is the US dollar compared to a basket of currencies, primarily the euro, the yen, and the British pound. And of course, when we get this news of the war in Ukraine potentially being over, this causes the euro to rise, and that causes the US dollar to fall, which causes the DXY to fall, if that makes any sense. So basically, again, Ukraine peace deal, that means that there's more confidence in Europe, right? There's less conflict, investors feel more confident, so they start moving into the euro. This causes the euro to rise relative to the US dollar, and that causes the US dollar index to fall, which is exactly what we want to see. We want to see the US dollar index falling. And as you guys can see right now, the US dollar index is at this key support level that is actually retested about 5 times since September. It's been retesting this level. And if you guys are familiar with technical analysis, you'll know that the more that a level is tested, the more likely it is for prices to break above or below that level. So what that suggests is that the US dollar is likely to continue rolling over here. And this is basically likely to result in a bigger bounce and a continuation of a rally in the crypto market. Of course, I know that prices are super beaten down, but they do seem to have bottomed. And what the DXY again is telling us is that if this DXY breaks below this key support level, then the US dollar is, then the crypto market is going to continue bouncing and continue rallying. Of course, that begs the question, what is going to cause the US dollar to continue falling here? And if we go back to this chart here, guys, looking at what the composition of the DXY is, we have the euro and the Japanese yen, which I actually focused on a lot in my video last Saturday. But what I did not mention was the British pound. And this is where things get really interesting. If you look at the British pound versus the US dollar, you'll notice that the British pound has bottomed against the US dollar here. Nice classic double bottom pattern. And it looks like the British pound is going to start rallying. And of course, what would cause this British pound to rally? It could actually be related to the UK budget, which is going to be announced later today, 12:30 p.m. UK time, which I believe will be something like 5 a.m. or 5 or 6 a.m. I don't know. In EST, depending on where you are. Anyway, key point being is that 12:30 p.m. UK time, the basically current UK government is going to propose a budget, and depending on what's in that budget, it looks like, at least based on the chart, that this could cause the British pound to rise, and of course that would to rise against the US dollar, and that would cause the US dollar index to fall and decisively break below the support level, which again, it has been retesting like multiple times, like 5 times you could say in total, but if you actually look at these wicks, it's probably more like 10 times over the last basically 2 or 3 months. And again, we want to see the DXY rolling over for the crypto market rally to continue. And as I just explained, it looks like the British pound is going to rally. This is going to pull down the DXY later today, and this should correspond to a rally or a bounce or whatever you want to call it in the crypto market. market. And if you guys are looking to trade that potential rally, which again depends on what happens with the UK budget later today, then do check out the link in the description, specifically this first one here, BitGet up to 50,000 USDT deposit bonus. When you click on that link, it'll take you to a page that looks like this. You'll notice that the Coin Bureau does have a partnership with BitGet, of course, but on personal note, I do think that BitGet is an awesome exchange. It's an exchange that I've used personally and one that I would definitely recommend. That does not mean that you should be keeping your crypto on BitGet or any other exchange for that matter. Always keep your crypto in your personal wallet. But again, signing up to BitGet is completely free. They have everything you could need: spot trading, futures, tokenized stocks, on-chain trading. So just create an account, look around, see if there's anything there that's right for you. And with some luck, you'll have enough trading volume that you'll get some of these bonuses. And again, I would recommend BitGet on a personal note, but I will repeat again, that does not mean that you should be keeping your crypto on exchanges, whether it's BitGet or any other exchange. Always keep your crypto in your personal wallet. Anyways, to wrap things up, guys, I want to take a quick look at a few crypto charts here, starting with Bitcoin. On the 4-hour, you can see that Bitcoin is squeezing with the Bollinger Bands here. What that means is that there's going to be a big move to the upside or to the downside in the next, whatever it is, few hours essentially. And when you consider everything we've looked at when it comes to the British pound and the effect that could have on the US dollar and bringing the DXY lower, that suggests that the chances of a squeeze to the upside here for Bitcoin on the 4-hour is higher than the chances that it's going to squeeze to the downside. Of course, there's no guarantees. At the end of the day, you're just dealing with probabilities here. And if we were to see Bitcoin squeeze to the upside, the next target to watch in that case could potentially be the Bollinger Band moving average on the daily, somewhere around 94,000. It's probably going to be a little bit lower by the time Bitcoin hits that level, but let's say somewhere between 92,000 to 94,000 is a level to watch in the next couple of days if we do get a nice drop in the DXY here as a result either of the UK budget and the British pound rising, or maybe some more positive developments around the war in Ukraine. When it comes to Ethereum, same idea. Ethereum is looking good here. I do think it's going to rally back up again to the Bollinger Band moving average on the daily, somewhere around 3,100. Again, depending on what happens with the British pound and that UK budget later today, potentially also stuff with the war in Ukraine. And most importantly, last but definitely not least, is looking at the ETH BTC chart. This is a chart that I've been watching very closely for many months because basically, guys, when you think about like Bitcoin dominance and altcoin season and stuff like that, of course, it all starts with Ethereum. So the most important pair to watch in that case is ETH BTC, basically Ethereum's strength relative to Bitcoin. And as you guys can see, ETH BTC has been grinding down now for a couple of months here, but it looks like it could finally be breaking. I mean, there's been many retests of this trend line, but it looks like now today, it finally looks like ETH BTC could be breaking above this level. And again, the catalyst for that could be the drop in the DXY, either as a result of the UK budget, which causes the British pound to rise, or other stuff in the war in Ukraine, like progress towards peace specifically. But anyways, it really looks like ETH BTC is going to break out here. And if it does, that suggests that Ethereum is going to rally a lot more than Bitcoin. And in turn, that suggests that altcoins eventually will rally more than Bitcoin as well. And this is also supported by Bitcoin dominance, which, as you guys might have noticed, has been falling in the last few weeks despite this brutal price action. And Bitcoin dominance actually fell even more overnight, which is a really bullish sign. And again, is supportive of this idea that ETH BTC is going to break higher here. They're all kind of correlated, all these things. It's super fascinating. Yeah, anyways, ETH BTC looks like it's going to break out. That means that ETH is likely to rally a lot and probably going to take altcoins along with it eventually. And the falling DXY potentially as a result, again, I know I'm repeating for like the 5th time, but as a result of the UK budget later today or some progress towards peace in Ukraine, this drop in the DXY looks like it's about to start. And once it does, don't be surprised to see a big rally, not just in crypto and commodities and everything. It's basically going to result in a rally in everything because, again, when the DXY goes lower, when the US dollar goes lower, global liquidity goes higher. And I will caveat that this correlation is not perfect on super short-term time frames like hour to hour. Sometimes, that correlation breaks down. So don't freak out if you see the DXY falling and crypto prices are doing nothing or also falling. That can happen from time to time, from hour to hour. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.